I'm Alan Kenny, Editorial Director with REIT.com, and I'm in San Francisco for REITWorld 2013. Joining me for this edition of CEO Spotlight is Nelson Mills, President and CEO of Columbia Property Trust. He's going to give us a little bit of an update on how things stand following the company's IPO. So, Nelson, how do you feel like your IPO this month was received, and what made this a good time to go public?
Well, Alan, it's early days. So far, so good. We're very pleased with the results. On October 10th, we listed the company. We've been a fully public company since our inception, for 9 years, widely held, but just not listed. And so to provide liquidity for our shareholders, create access to capital, lower our cost of capital, and for other reasons, we thought now was the time. We've been working hard for a couple of years to prepare for this event, and so far so good. As I said, we listed on the 10th. I think we've been well received, very successful road shows with talking to a variety of potential investors, long-term dedicated REIT investors, as well as shorter-term institutional investors. Trading activity has been a bit light to date, as we expected, but it's beginning to build momentum, and pricing is holding up very well. So far, it's going to take a few months for the market to fully warm up to our story, but so far so good. We're very pleased with the progress so far.
You mentioned some of the steps that have been taken to prepare. I imagine part of that was repositioning the portfolio a little bit. Can you give us an idea on where things stand there and what we can expect going forward? That's
right. So the REIT was originally designed primarily around a yield and dividend focus, and it accomplished that objective for many years for primarily retail individual investors. But in preparing for the future to sustain current income levels and for future growth, we thought it was important to do a few things. We were in 33 markets at one time, very widely diversified. We thought it was important to narrow that focus, and so we've taken steps in the last couple of years to sell assets, redeploy capital. We've reduced from 33 markets down to 16, with plans to go down to probably around a dozen in the next year or so. We're focusing on primary markets, exiting many secondary markets, and we're shifting more of our focus from predominantly suburban to predominantly CBD going forward. Also, we had a substantial percentage of our portfolio at one time was in single-tenant properties, and we're shifting more to a multi-tenant focus. So these are all steps we've been taking to position really for not only sustaining the current income in place and giving us the best opportunity to sustain and grow that cash flow, but really introducing opportunity for future growth.
And let's talk about the office sector as a whole. What do you think are going to be the big trends next year?
Well, it continues to be challenging. I feel like we feel we're past the bottom in most markets, and we're starting to see some significant progress in terms of the fundamentals. And several of our key cities are very strong today, such as San Francisco, Denver, Seattle, Houston. There are others like DC that continue to have some challenges that are a bit softer, but we know these markets we're choosing for the long term are good fundamental markets. I think next year we'll see more of the same. I'd say overall continued mild improvement, mild progress.
All right, well, thank you so much for the update.
Thank you, Alan.
And for more on this and other REIT news and analysis, be sure to check out REIT.com.